Hello, friends. Welcome to Nirmal. Today, we are going to talk about a corporate conversation, a result review, but also about an infrastructure company. Infrastructure has been the sunrise sector for us. The government has been spending a lot of money, a lot of orders has been coming from the government side, state government side, central government side, and we have a company again which has shown real great promise from the perspective of order book, from the perspective of increase in the revenue, and real sort of strength comes from their diversified order book. So with that, let's try and understand what the promise the company is holding. And for that, now let me welcome the Director and Chief Financial Officer of Patel Engineering Limited, Ms. Kavita Shirvaikar. Kavita,
Thank
ma'am,
you,
welcome to
Piyush.
the show.
Thank you, Piyush.
So, ma'am, let's first start with the result numbers here, and we saw the numbers. The numbers actually were showing strong growth. You have actually closed the year almost around 3,800 crore sort of numbers here. Uh, Q4 basically has been very strong for you. We have seen sort of good, solid growth. In fact, if I look at the EBITDA also, there has been slightly either stable EBITDA margins or slightly improvement. So what has really worked for you in the fourth quarter?
Fourth quarter, if you see our consolidated turnover is 1,200 crore plus. As against corresponding previous quarter, there is a growth of 25%. If you see execution, our strong order book. First factor, I would say strong order book. Our order book is crossed 20,000 crore plus. This year, we received orders more than 7,700 crores. Out of that, we have L1 is about 3,200 crores. Overall, including our order book is 20,000 crore plus. Out of that, 60% is hydro, around 21% from irrigation, and balance from tunneling, road, and other segment. Now, coming to, we have received some of the large hydropower projects from NHPC, CUPPL, and other PSUs, and execution across all sites going on full swing. If you see our employee base increase to 4,400, we have successfully mobilized, timely mobilized all large sites, and our employee base has grown to 4,400. We have strong equipment base. We have 1,000 crore plus gross block value equipment deployed at various sites. So, considering overall factor positively, our turnover has grown by 25%. We could maintain EBITDA margin 14-15%.
When you say equipment is roughly around 1,000 crores, this much of equipment can service how much of revenue?
This much, see, it is almost we can say it 5 to 10%. It depends on the project to project. Hydro, sometimes it requires more equipments. If we have a strong equipment base, going forward for new projects, we may not require to buy so much equipments because we already have a strong equipment base. So almost
Right.
our order book 20,000 crore, our equipment gross block is 1,000 crore plus. And on an average, 7 to 8% additional equipment we keep buying for the new projects.
Right. And I was asking from also from this angle that what would be a sort of average asset turnover in your segment. So, for example, if you have the equipments and this much amount of revenue can be churned, and since your order book is growing faster than the revenue, then if you suppose purchase more equipments, then this much revenue can be serviced. And then obviously rental equipment is always available. But what is the average asset turnover with which you would be really happy?
Average asset turnover, like we say, if 1,000 crore equipment, our turnover is 4,000 crore. So you say four times, four to
Okay.
five times.
Okay, ma'am. And before I go to the profits and everything, 20,000 crore order book, and when your sales is almost 4,000 crores, I think any investor will really be very, very happy because it is giving you a 5 year revenue visibility. Revenue growth, again, if you include, then at least 3 year revenue visibility because if you keep executing at a faster pace. From this perspective, ma'am, right now, within this order book, how much of the orders are already under execution?
See, out of 20,000 crore, we are L1 in 3,300 crore. So 17,000 crore is under execution.
Okay. And how's the overall order pipeline looking to you?
You see, we expect hydro. You see, we mainly work in hydropower and irrigation and tunneling power. Hydro and tunneling, we see there is over the next few years, there is an opportunity available of around 80,000 crore. And irrigation also, there is an opportunity available 90,000 crore plus. Overall, considering we see the sector which we operate in, we see we should be able to maintain 15% growth. Like this year we received 7,700. Next year we expect the same 7,000 to 9,000, 10,000 crore. So we should be able to maintain 15% growth in order book and as well as revenue.
Right, ma'am. So let me do a back of the envelope calculation here. So if I heard the numbers right, you actually are saying that the order pipeline looks like almost 170,000 crores, 80 plus 90. Would that the number was right, which I was hearing?
No, we're saying our current order book is 20,000 crore. Our turnover is 4,000 crore. I think next year we're targeting 4,500 crore and we expect to get new orders of around 8,000 crore. So then our order book would be from 20,000 to 23, 24,000 crore next
Right.
year and further onwards. And then after 1 year, 25,000 crore. That way.
Okay, ma'am. And what's the ma'am average win rate you have been seeing over the last 2, 3, or 4 quarters for the company in whatever tenders you're applying?
Correct. It's between 20 to 25%.
That's very good. Is it primarily because the competitive intensity is low, or you're finding yourself in a much sort of higher, stronger profile?
No, you rightly said the sector which we operate in, like 60% order book is from hydro. Hydro, if you see, there are few large players are there. So actually, there is a less competition. If you see last 3, 4 projects, we were L1, L&T was L2. So Patel, L&T, Afcons, only 4, 5 players who bid for the large hydro projects. So yes, there is less competition in the sector. Irrigation, while there is a competition, so but there our ratio is around 15%, and hydro our ratio is 25-30%.
Right. Even actually, the names you're taking, and if you're maintaining 25-30%, that absolutely is a sort of a stellar win rate, I would say. And even actually, you're maintaining a EBITDA margin of almost 14.5 to 15%, and that in an infrastructure space is actually very good margins. But I have one question, ma'am, for this quarter, fourth quarter, from a perspective of profit loss statement. We have seen very low tax rate this time. Help us understand what was the reason, because if I go to the last quarter previous year, then our tax rate was actually north of 30%. But this time, if actually, in fact, between 25-30, like, but much higher. But this time, the numbers actually seem to be very low.
As you rightly observed, there is some provision reversal because of some assessment completed for prior years. You see this impact.
Okay, and this is like one off. Next quarter will be back to average tax rate.
Correct. This is one of next quarter will be back to normal rate.
What is the average effective tax rate, ma'am? Like average of 2, 3 quarters, which you normally see?
Around 25-30%.
Okay.
Yeah.
Okay, ma'am. And now let's also understand, ma'am, how the sort of industry scenario at present looking to you. And I'm asking primarily because we are stepping into election year. So 6 months perhaps would be the usual part here, but then the next 6 months you start getting into the election mode from a government perspective, not from a corporate perspective. But what it really implies and what had happened in the last time when such an election year came. So how you're actually looking at the market?
Uh, See, I'll tell you, our main clients are central PSUs like NHPC, NETCO, NTPC. So, from the election point of view, we do not see any impact on that front. Now, coming to state, yes, there might be some impact, but eventually, we feel our target is around 7 to 10,000 crore next year, and we expect to achieve in first 9 months only to the at least 50-60% we expect to achieve. So, election per se, we do not see any major impact on our portfolio, which we are targeting.
Right. And uh, we all know basically that you actually have been appreciated a lot for the financial management across the industry. The debt actually has been reducing consistently. What has been the strategy around the debt? That is also raw material really for if you're building infrastructure. So what's the strategy on the debt, and Are we expecting this now to remain as a constant, or you further actually expect to cut down?
Yes. See, our debt has current year, our last year debt reduced from 2,200 crore to 1,700 crore. So overall net reduction of 500 crores. If you see last 5 year history of Patel Engineering, we have reduced more than 1,500 crore debt by sale of non-core asset and realization of our arbitration claims, which was stuck with the government, and profit from operations. Now, going forward, our target to reduce debt below 1,000 crore in next 3 to 4 years. That is the target we are keeping in our mind.
And what would be the average interest rate which you are serving right now on the debt?
For lenders, it is around 11.5%. See, we have three kind of element in our debt. Out of that, 1,700 crore is debt for the lenders, plus around 1,100 crore advances from contractors, like from client. If you see the projects which we are bidding, we are targeting it should be self-sustainable. We are not required to take any additional debt for execution of the projects, because though we have achieved the growth, our debt number has not increased, but actually it has reduced. So we are eligible for to avail the advances from the client for execution of the work. So that element is around 1,100 crore. Further, we are supposed to provide bank guarantees for the project, like performance guarantee, advance guarantee. So there also some charges are applicable. So if you see our 420 crore interest cost, because otherwise you would feel the debt is 1,700 crore, interest is 400 crores. So there is no match. But no, it has divided in three parts. For interest to lenders, it is around 220 crores, and around 110 crore is for the interest on contracted advances, and around 80 crores for charges of PG NFD charges, which is already factored in the cost of the project when we bid for the project. So if you consider our interest is around 200 crores to the lenders and our debt is around 1,700 crore. So on an average, 11 to 12% is our cost of money.
So if you're actually thinking around reducing the debt by almost 25-30%, that would roughly mean about 40 to 50 crore of interest savings. Will that be right
Yes,
assumption?
yes,
Right.
yes.
But what, how actually you're going to reduce that? Is it like largely through cash accruals, or is there some other plan also?
See, it will be out of some part of out of realization of claim arbitration award, some part out of sale of our land parcels, and some part of accruals from the operations.
What is the situation on arbitration, ma'am? Like how much progress is you are seeing when actually you see the cash flow sequencing there?
See, if you see our claims outstanding with the government is more than 4,000 crore. Out of that, around 1,400, 1,500 crore where arbitration award, arbitration is in our favor, and balance is either under arbitration or with the client. So we see in next 3 to 4 years, we see progress in realization of that amount also. So
And
current
that
year,
should eventually help your debt reduction automatically.
automatically.
Right. And any plans, ma'am, to venture out of India also for similar projects like hydro and all other projects which you have been doing?
We are already working in Nepal for two projects where our client is SJVNL, Satluj Jal Vidyut Nigam Limited, which is again Triple A Navratna company. So Nepal, Nepal we already working in for two projects, and further we are seeing evaluating other opportunities. Nepal and Bhutan we are open.
Okay, which largely basically is joining hands with Satluj or any central PSU.
Yes, yes.
Okay. And ma'am, also wanted to ask, out of curiosity for our viewers, is that how the sort of outlook on the road projects? What kind of work on the roads the company has been doing? How company is looking at this sector? Because this is also one of the fastest growing sort of sectors in terms of order pipeline.
No, very true. Road is also one of the segment fastest growing. But normally, I'll tell you one thing: कि there is a huge competition in road sector. There are
Yes.
the huge competition. So our target is our focus is hydro, tunneling, and irrigation. Some part we have road like tunnel road, like Sela Pass. We are doing one road, which is tunnel road kind of thing, which is exclusive, not normal road. So we are focusing on that kind of road segment. So our focus is right now hydro tunneling and irrigation.
Right. So primarily the strategy seems to be doing those jobs where competition is less, the complexity is slightly higher, you're able to get more margins, and because there is less competition, there are chances very less that the actual project becomes less fruitful for you. Would that be a fair statement?
Yeah, that is correct statement.
Right, ma'am. And perhaps the last question, ma'am. Should we say that over the next year or next 2 years, we are looking at roughly growth anywhere between 15 and 20%?
Yeah, we are fairly confident to achieve that goal, around 15 to 20%. Yes.
Any plans of fundraising, either debt or equity?
Fund equity. Recently, we completed our right issue successfully, 325 crores. So near future, we do not have any plans for raising equity or debt.
Right, sir. Right, ma'am. So I think it appears that the order pipeline is the most important sort of indicator, and that already is 4 to 5 times of the current revenue. You are also looking at a very brighter future. So I think that should sound music to the ears of our viewers, investors, and with that, I think we'll like to thank you for coming on the show and
Thank you.
telling us everything about your results.
Thank you, Piyush. Thank you.
And with that, dear viewers, it will be a wrap on this show. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.